Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 14th. It is a Wednesday. Welcome out, everybody. A lot of selling from bell to bell here today. Bad data over in Germany and China, kind of getting things going in the after hours. Then the yield curve inversion story coming out, really just gapping down on the open, taking out that little trend line we were looking at yesterday, and basically selling, and then selling some more. I believe there were only two S&P 500 companies that managed to actually close up on the day. It was not pretty for the bulls. Beautiful sea of red for the bears out there. On the earnings front, not particularly busy, but a couple of big names before tomorrow's open. We've got Cisco coming out here tonight. We've got Walmart coming out tomorrow morning. There are a handful of other companies, Tapestry, Allegiant, to name a few, Canopy Growth coming out as well, but not a whole lot of big names. But Cisco and Walmart are fairly big names. So certainly it'd be interesting to see what they do. And welcome out there, Michael. Great to see you as always. Hope you all had a good day trading. Certainly an interesting day in the market. You know, a slew of bad news while the market was closed. You know, really throughout much of the afternoon, as I was peeking in on the futures market, we were just kind of hanging around, right? For much of the, post-market yesterday, we were really just kind of hanging around. That gave out, bad data in China, bad data in Germany, gapping right into that trend line that we were looking at here yesterday. And welcome out, Johnny. Great to see you, my friend. Hope you are doing well. Right into that trend line, right out of the gates, buyers had to make a decision. And today that decision was not happening. Quickly breaking through that trend line, taking out that swing low, and basically it was on for much of the day. We did try to kind of stabilize, put in a little bit of a double bottom on the intraday late in the trading day, but as you can kind of see here, the last candlestick of the day took that out. So we are looking, today or yesterday knocking on the door of resistance. Today, all signs are on the bearish side of things. And unlike yesterday where we were kind of at some resistance, here today, something to prompt price action, I guess I should say. Today, we really don't have a lot until we're knocking on the door of that 2,800 range on the S&P, in my mind at least. Let's look at this, step by step on the S&P. Hey, Tanner. Yeah, good to see you, buddy. Hope you're doing well. Hope you're ready for some Bronco football, my man. I know I am ready for some Bronco football. So this 2,800 range, which is our next, in my opinion, the next real support level, nothing here on the weekly. That does put us in line with the 50 weekly moving average for whatever that is worth. Old resistance as well. Looking at it on a daily perspective, we really don't have anything, right? In this range. This is our old breakout range in this 2,800 range. It's just north of it here, as you can see, but that's where our 200-day moving average, old resistance, old breakout, old support bounce, old breakdown. So 2,800 really looking like it's standing out here on the daily chart. Scrunching down into a 4-hour chart, we're not going to find any more support. We're also not going to find any sort of moving averages below everything from a moving average perspective on the 4-hour, on the 2-hour, on the 1-hour. So it is certainly very bearish momentum going into tomorrow. Keep an eye on the intraday low, intraday high. We've really seen the market respond to those numbers during this very, very volatile stretch in the market. Little downward movement. If we follow through with this, I expect, technically at least, barring some news, and of course that's the type of market we're in, we do understand that, but barring weird news coming out to give people a reason, technically I can't see a good reason to want to buy the S&P until we get to 28. I expect more downward movement here going into tomorrow. We will check the futures. We will see. Not going to be terribly surprised if we gap on the open, right? We have seen that technically, though, confirming resistance yesterday, knocked on the door. A lot of bullish momentum. Definitely took out some stop losses. I don't believe it should have taken out all stop losses to the bearish side, but there were a few that it was going to get yesterday with all the price action. more importantly than that, technically resistance is held. So once again, we know that this is a really important level of resistance at that 2840 or 2940, I'm sorry, ballpark range, 50-day moving average on the S&P. Any real not scalping intraday buying action, at least as of right now, I think that has to be seen before we can get too crazy from a bullish point of view. If we see some buying going into tomorrow, because in this market, we've learned by now, right? Trade war markets expect anything. If we do see upward movement, definitely keep an eye on this trend line. That's going to put us right in line at around 29 with those shorter term or those longer term moving averages on the 15 level. That can oftentimes act as a resistance catalyst if we do see some upward movement here tomorrow. Expectation wise, I expect more selling. Of course, Dow selling heavily, 800 points, worst day of the year. At least the news headline tell me that. I believe them. It was pretty bad. Taking out that low and just smooth sailing, knocking on the door of some last kind of lines in the sand. As you can see here, not any real major support. We have bounced off of this on an intraday level. Maybe let's zoom in a little bit so we can kind of see that. But beyond these kind of tails that we have seen some price action off of, again, there's a little more room to the downside in the Dow. So another pretty bearish look over there. Tech definitely took a beating here today. So to no one's surprise, a ton of selling over in the NASDAQ as well. Again, taking out that Monday low, showing a little bit of confirmation, a lot of movement to the downside. And again, support, not really until we get into the 73.80 range. And we do have some price action there, from days gone by, but not really a lot to prop us up. So we're going to need the buyers to kind of flip us around, right? And maybe they will. I'm not going to be one of them, but maybe they will. But right now, we look at pretty much any intraday, and the bears are in firm control. Over in the rut, getting in on the action as well, quite a bit of selling. We do, I believe, need to be keeping an eye on this support level here at this 1450 to 60 range. If that does give out, we really don't have a lot to prop us up. We do have a little bit of a bounce from one kind of bounce support at that 1435 range, nothing between, and that's not really a very strong level of support in my personal opinion. Below that, I think we have to say the rut's coming out of its bearish. Now, it hasn't happened yet, right? We've seen all sorts of craziness on the rut somehow, some way all year long. For the most part, it's found itself in this range. I will continue to treat it as such, but if that support gives out, I do think we have to be looking at more or anticipate at least more movement to the downside. So pretty ugly for the bulls, pretty nice for the bears. And basically, if you were bearish on anything today, you probably looked really smart. Certain areas were hit harder than others. Over in the materials sector, working right into this trend line. And welcome out, Amy. Good to see you, buddy. Hope all is well. Working right into that old $56 area, that trend line. This is one of those sectors that, while it has slowing momentum on the longer term, we didn't really go too much past that recent swing high. We still technically are in an upward trend when we look at this from a weekly perspective. This trend line gives out, all of a sudden, we have to question that a little bit, right? So definitely an important price point over on the materials sector. Dow in a really interesting spot, I thought, selling in, of course, breaking down, selling, a little into a little retracement, just like the market, down Monday, up yesterday, down here today, but testing the all-time low as a potential support zone. If we see some more selling, I would expect a little bit of weakness to find its way into Dow. But really, it's kind of top to bottom as you look at these things. Everything's looking questionable. Lynn, one of my favorites. I think you could argue that this is, downward movement at all tomorrow is confirmation to the downside after, breaking down, creating a lower high, creating a lower low here today, follow through tomorrow. Not a lot of support till we see the 200-day moving average, to my eyes at least. So some weakness over there. Echo Labs holding up a little bit better, right? So we do have to give a little bit of credit where it's due. Echo Labs, Sherwin-Williams still holding up. APD pushed off of that resistance, but still holding trend. That's about where it ends. You've got Lib here knocking on the door of a break. You've got international paper here already broken down. You've got Newmont or Nucor here testing a longer term support level, not looking pretty. DD from the reports this week working into that first level of support. That breaks, I would expect more downward movement there as well. So it's an important place, I believe, for the materials sector at that trend line, at that 56. We have seen this, and welcome out Joel and hi Linda. Great to see you. Yeah, you said it, Joel. It was a loud day of bearish activity. No matter where you turned, there were bearish talking points. That's for sure. We've seen a ton of history in this 56 range. We've resistance, support, all of that. This thing gives out. I do expect more downward movement over in the material sector. Energy just continues to struggle. I've been pretty consistent. This is the area that I feel most bearish on, most legitimately, if that makes any sense. That continues to be true. It's not tremendous movement to the downside on some of these things, just moderate movement to the downside on others. SLB, after breaking down, just tanking really, really heavily here today. You have PSX, one of those few areas that's actually kind of holding up here, but even as much as they've been holding up, down well over 2% on the day. ExxonMobil breaking down, ton of momentum to the downside. Energy continues, in my mind, to be very, very legitimately bearish outside of just the news. Of course, we know this type of market. If the market's buying all day tomorrow, just like yesterday, or just selling all day like today, everything kind of gets caught up during those little stretches. But I do expect to continue to see overall more movement to the downside. 60, a very strong level of resistance for us now. Pivot, downward movement, lower low, very strong level of resistance. Anything bullish, I'm not interested till we reclaim that, and I don't have high expectations of that. Not a lot of support either. Many of these things this is a new news for these guys right in this sector. Many of them are at or near 52-week lows, have already broken through support. On the ETF, there's just really nothing from a support perspective. Something may develop and we may need to retrace or consolidate before we just free fall to 54, but they're really just, I don't see where the catalyst is, at least short term, over in energy. Still pretty bearish. Banks were just hammered here today. The yield curve story is definitely going to hit up on the banks, testing support at $26. The support gives out on the ETF. I don't think there's any logical reason not to assume that 25 is realistically in play. We do have a decent history in that $26 range, but beyond that, we really don't have a lot till the $25 range. Banks are the name of the game in the financial sector right now. Definitely the area of most concern. You've got J.P. Morgan hanging by a thread, right? Hey, it's at support. It was able to hold it today, but boy, it was close, hanging by a thread at support. Bank of America hanging by a thread at support. Wells Fargo breaking through some support, actually breaking through, it looks like, two levels of support today, our swing and our previous swing. No, we do have support not too terribly far away, another level. Citigroup hanging by a thread. Banks are a pretty scary place in the short term, especially if all these support zones give out. That's going to line up pretty close with that 26 range on the XLF ETF. Definitely something we need to be keeping an eye on as we're moving forward. I think we are very shy about working with banks from a bullish perspective in the very, very short term. We'll see if we can hold these support zones. Maybe we can talk a little later, but they're going to have to do a little bit more than just hold today or tomorrow for me to get interested. On the other side, we do have some things out there. CME is a great example, pulling right back into the old breakout point after a good move post earnings. Obviously going to need some development. Very ugly candle closing near the bottom, but an interesting price point. If we do simmer down here over the next couple of days, that could be something worth taking a peek at from a bullish point of view, but no confirmation. Price is interesting. Confirmation, at least for me and my money, not there here today. So keep an eye on the banks. I think we do need to be fairly cautious with this area. They got hammered today. They're going to be pretty darn sensitive to all of this rate stuff. While that's kind of the leading story or one of the leading stories in the market, probably not the type of things I'm trying to pick the bottom on. If this is the bottom, good for the brave enough people to buy off of these support levels. If it breaks, more downward movement is to be expected. Over in XLI, again, no one was immune today, not even our defensive sectors. They were just a little less beat up today, working into a pretty respectable support zone at 73. If this zone gives out, I don't know what exactly we should make of 72 down here on this little tiny swing low. I think we have to respect it. But if we do give out here, I do expect firmly to get to 72. There's nothing from a support perspective there. I don't know how strong we should call that 72. The only reason we've seen price action, and we saw a major turnaround there at 72. So I think it wise to continue to respect it. 72 gives out. We're realistically looking at that 70-50 range as that next level of support. If support holds, we are at support. Didn't break today. Maybe some interesting things, but boy, there's not many out there. There's only a couple of things that I could even theoretically be interested in as a bull tomorrow. One of which, though, is in the industrial sector, in the defense. Our old friends, two friends, right? For a long time, we were working with Level 3 and Harris, and now they were such great friends, they turned into one friend. Nice, fairly orderly pullback here, doging a little bit here today. So holding up very, very nicely. Great trend, still very much intact. I'm not going to have much on the bullish radar tomorrow coming off of today's selling, but probably need there'll be a couple things in the report. Certainly Level 3 here will kind of make my list as well. One of the few things that I look at and say, yeah, that's an interesting bull play after today's day of selling. But more broadly speaking, again, this can be an area that is, tough to deal with when it comes to the trade war. We are getting pretty close to a support zone on CAT. That's who I was trying to go to. Here on CAT, very, very close. Going to be interesting to see. Trade it. I would never dare buy this, but it'll be interesting to see. This has been a support zone that's held up on CAT fairly regularly. I want to pop into the weekly chart here on CAT, see if there's anything below that. If that support level gives out, it looks like we have an old resistance point that may be able to catch us up. This is an interesting area. Old support, 200 weekly moving average. Again, you've got to be a lot braver than me to want to buy off of that, but an interesting placement for the most part. Very, very weak, and I'm very concerned if we break down on the industrials. Imagine if the market's breaking down, all of these things are. Certainly expect the industrials to follow suit. Over in tech, just beat up really good here today. Big gap down on the open like the market. Really, the bears are in control. Again, these more aggressive sectors are going to be more likely to respond. Big days up, big days down while we're in this market volatility, right? And welcome out, Josh. Welcome to the team. Good to see you here. It's just going to be one of those areas. On the bounce back days, they're going to look nice. I wish I would have bought them. On the bearish days, they're going to look nice. I'm going to wish I would have sold them. Technology certainly going to be one of those areas. Yesterday was huge bounce back over in tech. Today, kind of giving it all back and then some. Technically, kind of in an interesting spot. One of the few areas that I would feel really comfortable, a really good bullish signal would be above this 70. Let's get in a little more specific zone. This 79.70. So above 79.70. If we're able to, establish some support, I think that's pretty interesting. That's going to be some work to do. Technically, there's really nothing until 76 as a support zone. So bears are in control over here as well. Of course, semiconductors, always worth taking a peek at the semiconductor ETF, see how they're holding up. We're able to hold support here today. Definitely a positive in a day like today, right? Very easy to break support when everything is selling off. Again, pretty aggressive, going to be fairly sensitive to any trade wars rumblings, for better or worse. I continue to shy away from those more aggressive areas personally, but I can see the opportunities on both sides. They just can move quite a bit. Over in staples, again, nothing was really immune. Our defensive areas did hold up a little bit better here today, but they were certainly not there. So yeah, I'm interested in that Walmart earnings. See what always interesting to see what those giants do. And I don't have any earnings trade or anything on it like that. but I'm always interested in that. Oh, gee, let's go take a look. I don't really track General Dynamics too terribly long. One of those industrials. This is one of the areas I do feel, for whatever it's worth to you, Josh, more comfortable with the defense industry than just about anything outside of things like staples and REITs and utilities from a bullish perspective. And an interesting point, trying to hold that 50-day moving average. If we were able to hold that 50-day moving average, break above those highs could be an interesting one. Good luck with that. That's one of those areas that I do feel the industrial or the defensive industry as a whole. I do feel the most comfortable with it, outside of maybe some of those. I'm not too worried about the REITs pulling back or something like that today, but I'm pretty shy with more aggressive sectors, industrials as a whole. But I do like the defense, especially if we can see some lining up there. And much like yesterday, we've got a pretty clear level of resistance. Beyond this would kind of be that general dynamics pattern, right? Where we created that higher low and thus and then a higher high through the break of resistance. Still holding trend. Really have to be looking at these lows. This trend line, was useful, but I think we can get rid of it now that we actually have our swing low down here. I'd give it a little more room. So I'm continuing to look at it from a bullish point of view, but I will say this. I think you could make an interesting case, if you wanted to, on the bearish side of things. We pulled back, we broke out, we pulled back, we created a higher low, we came back, tested the trend line, saw some upward movement into our previous swing low, and at least as of right now have seen downward movement off of that. So I think you could make an interesting bearish retracement case off of the staples sector right now. I don't think we're lacking for bearish opportunities. I'm going to shy away from that overall, although I think you can make an interesting case with where we are. I do think we have to respect whatever we're doing. I think we have to respect this swing low at this old breakout point as a pretty respectable level of support. Over in utilities, just knocking on the door for 3 days in a row with the doji party, caught up in the selling here today. Was it all that? Was it the 61's tough? Could be a little bit of both. Nothing really has changed in my opinion. Still like utilities, still waiting for the break above 61 to be the real good signal. Of course, XEL, probably my favorite setup, and probably don't have to realistically worry about it hitting entry points tomorrow in the utility sector. From the stock report this week, if I am not mistaken, very clean triple top at $62. Got a little work to do to even challenge that. Probably going to need XLU to break out along with it. Certainly an interesting one. You also had, peeked them a little earlier, see how they finished. Southern in a little bit of a pullback phase. So maybe if we do work our way back into that, towards that 59 support zone on XLU, maybe there could be some interesting pullback candidates, because some of these utility stocks actually already have broken out. Southern Company being one of them, breaking through, creating a new high. So maybe if we do see a little more pullback towards that 59 zone, or even catching something a little bit higher, maybe that could be of interest for us as well. Going to need a little bit of work. Again, tough for me to want to buy off of closes that we're seeing here today. Over in healthcare, pushed down heavily from that 92, taking out that support zone. Not a lot of support until we get to 88, so more room to go on the downside. So we're going to have to wait a little longer for any bullish signals if that's what we have been waiting for. Pfizer, just another day. Pfizer's just been absolutely destroyed lately, and there is just no end in sight, apparently, just continuing to push and push and push to the downside. Again, healthcare is not, a very defensive area. I agree with Coach Matt. It might be called it by the S&P, but I don't think anybody really believes it. At least not anybody that I know believes it. Things are looking fairly rough over there. That break of support really going to hit things pretty heavily. There might be some interesting things that can develop on some of these few, the Abbotts of the world, the MDTs of the world, the MRKs of the world. Again, we're a ways away, but maybe we can see a little upward movement and turn into a cup and handle, right? We're projecting well over a week into the future at this point in time. Things are looking very, very weak. Lilly, after kind of having a decent little rally post earnings, kind of working back up into that old 116 support zone, 200-day moving average. tremendous selling over here in the healthcare. Broadly speaking, I think we do need to be cautious. I'm still open to both sides, just a lot more open, just like about everything, just a lot more open to the bearish side of the equation in healthcare at this point in time. Over the REITs, they got caught up in the action here today as well. They've been fighting resistance. A pullback does make sense that it would happen here today. I'm going to be looking at this as a potential opportunity to buy in to a pullback on the REITs. Again, is it tomorrow? I can't really see any scenario where I'm feeling great about that personally, but there are going to be potentially some pullback opportunities. Slow drift to the downside on American Tower, CCI. Pretty big bearish candle. No reason to think that that's done yet. But we do have an old level of resistance, recent breakout point that could act as a support catalyst. Right now, overall on the REITs, selling at resistance, especially in today's selling. I mean, the Dow's down 800 points. Pretty much everything is going down on a day like that, right? Haven't formed support. Maybe this old triangle line can be a support level. I'm going to keep it there until it's violated. But really, anything into 37, quite honestly, could make sense, at least in theory. We'll keep an eye on this one. I'm looking at it as a bullish retracement opportunity. Just again, can't see a scenario where tomorrow is the day that we're getting into that. And lastly, over in the communication services, it's going to get caught up tremendously in a day like this. Of course, we peaked at Facebook with Andy here yesterday. We were seeing this pattern all over the place in the market yesterday, right? We maybe didn't think we were going to break either way. Probably didn't assume we were going to start the day on the trend line, but that is the way that it went. Clearly breaking that trend line, now working back into a support level. Never a good thing when, at least for the bulls, when Facebook is dropping the XLC bulls. Never a great thing. Very similar. Don't really have a lot of support really at this point in time, and we do have little things. We do have some stuff at 47.40. We have a pivot at $46 approximately. Not a great look on that chart. Interestingly enough, our friends over in Google, I think relatively speaking at least, held up their end of the bargain today with as much as maybe you could expect, working back into that trend line, bouncing back, creating that higher low, little bit of sideways. Still think anything from a bullish point of view for me would be back above resistance here. But interesting to see that we're holding that trend line, also kind of lining up, as you can kind of see here, with that old breakout point. It was earnings related, but it certainly was a big break. Again, this is going to be much like tech, pretty darn aggressive. Overall, not going to be my cup of tea if I'm looking as a buyer. If I'm looking as a seller, I'm not too terribly picky. I'm not interested in going short REITs and utility stocks personally, but everything else is fair game. And I can't believe we almost forgot our friends in discretionary. Again, rough day. Again, a little bit more of an aggressive area. Some things are holding up okay. Starbucks is still holding its recent pullback, has created, holding that higher low. Actually, I feel that Starbucks is one of those that if I'm looking for something, on a, the market, runs early tomorrow like it did yesterday, maybe setting up all right, got a pretty clear topping out pattern here on the intraday. It would need to get back above resistance, looks like about $97. So going to have a little work to do there. They're holding up okay, but a lot of weakness over in Lowe's. Our friends at Home Depot, although they do have earnings coming up here shortly, so it doesn't really matter to me, very bearish signal. Kiss goodbye off of that old low, breaking support here today. Not a lot of support for a while, so things are not looking great overall. GM down big here today, breaking some support. So again, this is going to be one of those aggressive areas, going to be a mover, relatively speaking, to some of the other sectors out there. Going to have to be careful with anything right now, right? But certainly, we're going to need some nice buy signals, in my opinion, for any of these, aggressive sectors that are just so beat up. The trends have been violated, support's been broken. We've created lower highs, we've created lower lows in certain cases off of them. Pretty darn bearish look going into tomorrow. Check the futures. Again, this is the market that we're in. We might love it, we might hate it, but it is the market that we are in right now. And so very, very sensitive to news and very, very big candles. And that I think everything that we do should be predicated upon the fact that that's probably how it's going to be until it's no longer that way. Over in the dollar, nice movement off of that, off of yesterday's candle. Coach Cody was talking about this one with us. Nice upward movement here today into that $98 range. We do have some highs that we're going to need to keep an eye out for, just shy of just around 98 and a quarter. Of course, on a day where the Dow is down 800 points, everybody's going to expect exactly what we see here on the VIX. Big pop, big, nobody needs the VIX to tell them that fear is very real in this market, right? Fear and paranoia, and I don't want to miss out. All of the emotions that probably no trader wants to have are prevalent in this type of a market. Certainly the VIX would suggest that as well. Of course, very risk on environment in the stock market, going to likely lead into some decent movement over in gold and silver, exactly what we saw here today. Going into a longer term, again, you guys know the drill, just like pretty much everybody else you talk to at Tackle Trading. Bullish on gold as long as it makes sense. We have a little bit of a fight here, an old support. I mean, this was a big breakdown point, so it kind of makes sense in this 15, 25, 30 range. Doing a little bit of a dance here as a potential resistance catalyst, something that we can keep an eye on. Overall, though, I mean, this is why turn on a good thing, right? Gold continues to be very, very strong. Silver as well. Again, we do have some old resistance, little downward movement off of yesterday's high, but that's really about it. Bulls still very, very much in control of the metals market. On the other side of things, we're in an interesting spot with crude. We looked at this little weird triangle-y thing that we put together yesterday, right? Breaching it on the intraday, recapturing it, so holding trend, technically beyond the intraday, but now we're kind of putting in, a little bit of a pinchy type of a pattern, right? Break above, break below, going to be the signal. Zooming in on crude on an hourly basis, very interesting. I would expect that this old trend line should present a resistance catalyst, a little bit of a bearish retracement. I would expect some downward movement if we get some confirmation. Better confirmation would be taking out today's low. If I see today's low taken out, trend has been violated already. We've created a lower high as well. We failed at support, so below 54. Probably expect more downward movement and maybe a legitimate run closer towards that old support in that 50-51 range. Hasn't happened yet. Break back above it. I'll just put it right back into this. Break above could be a bullish signal, but probably going to need some work to do before we get there. And natural gas just continuing to kind of take the week off, meandering ever so slightly to the upside. Nothing really of any impressive note one way or the other. Again, the only real thing to take away is it does feel that the buyers are starting to trickle in, or maybe just less sellers. I don't know. I don't think there's any great technical reason to get into natural gas, but it is beat up. It does have that historic $2 support zone. It really feels like there's some little stabs maybe being taken to the upside. I'm not there yet. Going to need some upward movement. I think you could say it's a bearish retracement. I don't think you can say it's a confirmed bearish retracement yet, but I do think you could make a case that it's not too far away from that potentially. Keep an eye on this old support zone as our first resistance catalyst. 50-day moving average, obviously going to be one sitting on top of us as well. One other interesting chart I found going into tomorrow. I'm not sure, they were on a report a couple weeks ago, never triggered, but they're not off my report because it's the same type of a pattern. We do have a potential. We already could. You could even make a case we've already had it. I know we've looked at these guys a couple of times. A little bit of a head and shoulders pattern, right? Left shoulder blade, head, right shoulder blade. Already have broken through it, but we've established a pretty respectable level of support here as well. Break below that, that's an interesting bearish signal in my mind. I thought that was an interesting one. There's going to be plenty. You guys don't need me to help you find some interesting bearish candidates, things testing support or that have broken support. I still think match is an interesting spot personally, after big breakout on a real solid response to earnings, pulling back into the old resistance, testing it as support, a little bit of a doji holding up. If we're talking relative strength here, you got to give your little bit of credit to old Match here, right? Certainly not an impressive day, but when we're seeing things that are down 10%, all over the place. Macy's down 13% on an earnings miss. Two, I think, S&P companies closing technically in the green. we'll call it a small win. A little bit of, no confirmation in my opinion yet, but pretty orderly pullback in pretty bearish conditions, testing the 20, testing the old resistance, a little bit of a doji. I think that's worth keeping on the radar personally going into tomorrow, but I don't really think tomorrow, tomorrow could be a confirmation day for me. Probably can't be an entry day for me personally. Of course, I'm always going to pay for a little more confirmation. So ladies and gentlemen, that is where we find ourselves. Lots of red, lots of technical reasons to believe it's going to continue to happen. We really don't have any support. All of our time frames are very, very bearish, right? We zoom into a 5-minute time frame and it's just knocking on the door of another bearish breakdown, right? We are in a very news-driven market, but bears are in control. We've seen downward movement off of resistance. So I think we continue to proceed accordingly, trading what we see, not chasing, not getting beat up, right? We're going to lose some trades, especially swing trades, due to some whips on the market like this, and that is what it is. I think for most people, we're going to be running into that. That's fine. That's part of the deal because, well, our bearish trade sure looked good today. The bullish ones that maybe we got into yesterday, I don't know, and vice versa the day before, right? We're going to win some, we're going to lose some. There's always things we can do within these type of market conditions. First things first, we got to recognize them and call it what it is. This is not the same market condition that we were seeing throughout most of the summer, right? We're going to have to adjust. I know many of you guys are doing a great job of that. That's, shortening up position sizes. Where's the rule that says I can't use a third of a position, in a volatile market? I can have that rule. I always pull back. I'm a wimp. You guys know me. I can look to, out of the money credit spreads. We can say what we want, but the market has not broke resistance since it broke support. Right, there's been some wild rides, but if we're putting things out of the money and actually using support and resistance on those OTM credit spreads, sure, some of them I'm sure get caught up because, well, that's the name of the game. But for the most part they do seem to be doing pretty nicely to me. We can use debit spreads. Debit spreads can be an interesting tool, a little bit of offset in the volatility because while we're long one option, we're also short an option. I'm a fan of using the spread itself as the stop loss, if that makes sense. And so if I buy at 3, sell at 1, I'm into the debit spread for $2. I'll just assume that that's what I can lose and position size accordingly, so I can sit through the back and forth. So just some ideas on, and just some of mine, right? There's others out there, right? But just some ideas that we can, use to still work and trade within a volatile market without sticking our necks out. And Joel, it was bad economic data, after hours over in Germany, over in China, then moving into today's open cash open here, inverted yield curve comes out. While that's really it is a recessionary indicator, but it's like months and months down the road, right? So it's not like, oh, today is the day that it's a recession, but it is a recessionary indicator. That coupled on top of everything, we gapped right into that support zone right out of the opens on the bad news. Then more bad news comes, and then we take out support, and there's just no catalyst. So I believe, kind of starts with bad economic data over in China, over in Germany, while our markets are closed, piled on by inversion stuff. That's a huge headline. We'll see what comes of it, but it's everywhere today, whether you care or not. You can't get away from it. And then the technicals really take over. We break support, and everybody in their right mind is saying, we just don't have anything. Once we took out this support zone at the first hour of the trading day, you can kind of see that we were saying, okay, well, is support going to hold? Is support going to hold? Once that gave out, where's the technical reason, right? Bunch of bad news, no technicals in sight really to prop us up as a potential support catalyst. So at least in my opinion, that's kind of how this party got going. Pretty darn bearish close too. So, and hopefully that makes sense. I don't know if I'm right there or not, Joel, but that is my take on it, of course. So yeah, this is a I much prefer the summer markets. I'm with you, Joel. I like dull markets. I like boring stocks. I like markets that are up a little, down a little bit, but hold trends. I like to find things that have very clear up or down trends, very clearly breaking major levels of support or resistance. These are mellow. These are comfortable to trade from my perspective, at least. If I'm a day trader, I probably love this, but I'm not really much of a day trader personally. And so this increase in volatility, I've seen it. We've seen it. We saw it in May even, right? Of course, we saw it last fall, right after you got going in October, it sounds like. So when we see this increased volatility, one of the things that we can all be guilty of is trying to apply the same methodology. It's not as easy. Management is a lot harder, when things are doing this than when they're just drifting. I love a drifty market. Luckily for me, most of the time that's what we're getting, right? It's just, up or down. I don't really care. Just be orderly, be consistent. Not a huge fan of these huge candles, 3% days, 2% days, back to back to back in the S&P. And sure, every now and then you're all on the right side of it, and those are great days, right? But for the most part, give me a boring market. But we've got to be able to deal with this market, because it doesn't care that I'm a wimp. It doesn't care that I would rather it started to just be mellow again. There's definitely ways that we can do it. One of the big ones, and I know I brought it up a few times, but it is true. One of the big things that we see, and that's not going to fix everything, but one of the big things with stop losses, trying to play the middleman in a market like this is tough, right? Being really tight on our intraday, using 15, 30 hourly, short-term time frame from a management point of view, or giving them room, saying, hey, it's got to clearly take out that previous swing high or that resistance level before I get stopped out. Those usually work better than trying to find the middle. And I know we can all be guilty about trying to find the middle. Hopefully that does give you some ideas on the management side of things. That's one of the trickiest parts in a market like this. Stop outs are going to happen more often. All right. And we have to find ways to deal with them. So hopefully that gives you some ideas. Great thing is, Joel, you can, of course, learn to really play intraday, the same way that you're playing daily. A chart is a chart is a chart. You can do, set up a practice account with Forex or with commodities if you want to go that route. But really, all you're really doing is shrinking your time frame. That's all you're really doing here, is shrinking your time frame. Hey, we're at a support level. We're doing a little dance. I know we get to play the hindsight game here, which is always fun, right? We're always perfect in hindsight, but we're at support, doing a little dance. That's going to be a breakout, whether this is a monthly, daily, 5-minute chart. There are going to be some rules associated with it. And so, that's something to keep in mind. Coach Mark over at Tackle Trading, certainly has some interesting day trading rules. Coach Slavic as well. Coach Slavic's a heck of a day trader. Definitely catch his reports. He'll give you some good pointers over there as well. Slavic's probably the most tradery day trader I know. He's really good at his craft too. So hopefully that gives you some ideas. Of course, ladies and gentlemen, we've got our STEP webinar here tonight over at Tackle Trading. So, I know you guys, probably many of you are already into that STEP system. If you're not, head over to Tackle Trading, a free webinar, get in there, check it out, see what you think of the STEP system. We'll get you hooked up with a free trial too, so you can get some time to go through it. Would love to have you if you're not a pro member. If you are a pro member, hey, you know the drill. We already love to have you, and it's always a pleasure. Beyond that, of course, you know the drill. We always encourage you to subscribe to the channel, hit that notification bell. Join us on our different social medias, Instagram, over on Twitter at Tackle Trading. And of course, you can find me at FrankMartin23 on Twitter if you're ever looking for me. So, ladies and gentlemen, that's going to do it for another interesting day in the market. I do notice one thing: the market recap goes longer the more volatile the market is. So, unless it's Fridays when we sometimes get going, but it is what it is, and this is the market that we find ourselves in. Follow your rules. Don't go chasing. There's nothing wrong with shrinking position sizes. Realistically, no one's going to retire off of this volatility, type of movement in the short term. But, if we're not careful, we could dig a big hole. So definitely have to be careful to not be chasing. And thank you, David. Appreciate it. And great to have you here, Adib. Good to see you as well. Adib, are you planning on playing World of Warcraft Classic here in a couple weeks? It's close. It's close, and me and all my nerdy friends are ready for it. And I believe that Adi was planning on maybe taking a look at it as well. Maybe he snuck out, or maybe he's just got a little more, common sense than me and not going to tell people. So, yeah, it's pretty darn bearish. It's pretty darn volatile. Again, trust what you see with your eyes. We are going to have to shrink some of these time frames, because that's what we're in. And love it, hate it. Most important thing is to recognize it. So I'm not sure. Me and my brothers, David, you play too? I'm not sure just yet. We're going to be on a West Coast server over because on a PvP server, of course. And so it'll be, I think it's one of them that we're thinking about is Whitemane. I'll let you know when we get it settled in. Adib, you can find me at Moodles. Moodles is my character's name in the live game, and will be my character's name in the new game. So if you ever see an innocent looking Tauren running around, oh, awesome, Linda. Well, see, I'm not the only dorky guy playing. It makes me feel better. You ever seen an innocent looking cow running around, Adib? You'll know that it's probably me. So yeah, we'll have to coordinate. Those of you guys who play, it's always more fun to play. Just like it's fun to go over stock stuff with friends, it's always more fun to play video games with friends too. And so same with your son, Linda. He's always welcome to come hang out with us if he would like to. So we'll keep you posted where we're going, Adib. It would be definitely an interesting thing to do, to have a few more folks to run around with. Of course, you got to be Horde, right? I made the mistake. Coach Mark got me playing Warcraft when it first came out. He said, be a warrior, Frank, play on the Alliance, Frank. And I didn't know any better. So I listened to him. It was bad advice. And ever since, I don't play a warrior and I don't play Alliance. So we'll see you over there. We're all pretty excited. Who knows how long it'll last, but it'll be a fun short-term run for sure. So I'll let you guys know over on Twitter or something once we get settled in. Or if you guys get settled in, let me know, because if you got a strong feeling going one way or the other, certainly not settled one way or the other. So, all right, guys. Well, thank you. Those of you who have stuck around and heard the nerds talk a little bit about their video games, do appreciate it. Always a pleasure, guys. Thank you so much for your time. Always great to spend a little bit of time talking trading with you. Definitely an interesting market that we're in. We'll see where it takes us here tomorrow. Enjoy the step system tonight if you're heading over there. If you haven't tried it out yet, definitely would encourage you to do so. No harm, no foul, right? Get in there, see what it's all about. It can definitely help your trading, I believe. So, all right, guys, thanks a lot. Get out of here. Have a great afternoon. I'll see you same time, same place, I'm sure, for another interesting day here tomorrow afternoon. Thanks, everybody. Bye now.